Hey everyone, and welcome to another deep dive with us. You guys are really interested in learning more about how climate change affects a company's value.
Okay.
So we're going to break down a super fascinating research paper for you.
Okay, great.
It's from the Journal of Business Research. And the title is, hold on, let me make sure I get this right. Climate Change and Shareholder Value.
Yeah.
Evidence from textual analysis and Trump's unexpected victory.
Yeah.
And guess what they used as like a real-life test?
Hmm.
Trump's 2016 election win.
Interesting. Yeah, it's a clever approach, really. They're using that victory because it was such a surprise.
Right.
Like everyone thought, the polls all favored Clinton at the time.
Totally.
Right. So it really was a sudden shift in expectations, especially since Trump's stance on climate change was so different, compared to Clinton.
So it wasn't just like any election. Like this really shook things up.
Yeah.
And that could like show us how investors react to climate concerns when like all the political stuff is changing around them.
Right.
But hold on, before we even get into like the results, how did they even measure a company's vulnerability to climate change in the first place?
Well, instead of just like looking at, general climate risk, this study gets really specific. They focused on what they call firm-specific climate change exposure.
Okay.
So they actually went deep into what company managers were saying during those earnings calls with investors.
Oh, so like what they're saying to people who are investing in their companies.
Yeah, exactly. And they used, some pretty fancy machine learning to go through all those transcripts.
Wow.
And analyze all that.
So they're looking past all the like, official stuff, press releases, and getting to what they're actually discussing.
Exactly. Like, what are they actually worried about?
The nitty-gritty.
Yeah, the nitty-gritty. And you know what? Three main climate topics kept coming up. Opportunities.
Okay.
In like new green solutions.
Right.
Physical risks, so things like extreme weather.
Of course, yeah.
And then regulatory risks, so like the costs of having to, comply with all the new climate laws.
Okay, so that's how they measured a company's exposure.
Uh-huh.
Now, back to the big question. Did Trump's win make climate-conscious companies more valuable to investors or less?
Well, there were two main, I guess, theories going into this, right?
Okay.
The first one, let's call it the wealth reduction hypothesis.
Wealth reduction.
This basically says, if investors saw less action on climate change, under Trump, they would start to get nervous.
Makes sense.
Right, and they'd start to devalue companies that were super exposed to climate risks.
Right. So like if you suddenly thought sea level rise was like a way bigger problem, you wouldn't want to invest in a company with like tons of beachfront properties.
Exactly.
Makes sense.
And then on top of that, right, there's also the uncertainty around the regulations.
Oh, yeah.
Companies might have to like totally change their climate strategy. Yeah, they'd have to scramble. And, that adds more costs and more risk, which, investors don't typically like.
Right. But wasn't there also an argument that maybe deregulation would actually be good for some companies?
Yeah, right. There was. That's, we'll call it the wealth enhancement hypothesis.
Okay.
The idea there is that, well, investors would see Trump's promises to like, roll back some regulations as, well, A+. Right. For certain climate exposed companies, at least in the short term, you have fewer rules, lower costs.
Or freedom.
Yeah, more freedom to operate. So like a company that, pollutes a lot might think, hey, the environmental guys are going to be a little more relaxed, and that would make them more attractive to some investors.
Even if it's, bad for the planet in the long run.
Exactly, yeah. It's a cynical view, I guess, but, the researchers wanted to actually test this out for real.
Rigorously.
Yeah.
So which one turned out to be right? Did investors go for the long-term risks?
Yeah.
Or did they get, pulled in by the potential for short-term gains?
The results, well, they were actually pretty clear. Companies that had more exposure to climate change, their stock prices took a much bigger hit after Trump's win.
Wow. So the market really wasn't buying the deregulation thing.
Yeah.
It seems like investors knew that climate risk is, well, it's here to stay.
It is.
No matter who's in office.
Right. And you know what? The impact was not small. They found that for every standard deviation increase in a company's climate exposure, their stock returns dropped by, get this, over 8%.
Ooh.
in just 5 days.
That's huge.
Yeah, that's a big sign.
So you're saying investors are really already factoring in climate risk when they're deciding what to do?
Yeah.
And this is big for all of us, right? Not just Wall Street.
Absolutely. Whether you're, actively investing or just trying to understand, what's going on in the world, this research shows that climate change, it's a factor. It's a factor you can't ignore it. And you know what? It gets even more interesting when you look at the specifics of which types of companies, were most affected.
Oh, okay. Interesting. So it wasn't like every company with, high climate exposure had the same downturn?
That's what makes this really interesting. It wasn't the same for everybody. Like, the age of the company really seemed to matter. The older companies, the ones that have been around longer, well, they seemed to handle things a lot better after Trump won.
Yeah, like they had more experience.
Yeah, more experience, more resources too, probably.
Like, I don't know, a really good sailor weathering a storm.
Exactly. They've been through it, They know what to do.
So the younger companies, they took a bigger hit?
Yeah. Yeah, it looks like it. I mean, they might not have the resources or the experience, It's tough to adapt to all those sudden changes when you're just starting out.
Makes sense. So track record matters. But are there other things investors can look at, like to see how a company's doing with climate stuff?
Well, here's something interesting. Check out their dividends.
Dividends.
Yeah, like companies that pay out more dividends, they didn't seem to have as much of a problem with climate exposure.
So why would dividends matter? Like, what's the connection?
It could be a sign that the company's well run.
Like their leadership is good.
Yeah, good governance. They're thinking about the long term. They're prioritizing giving back value to the shareholders, even when things are, uncertain.
So it gives investors confidence.
Yeah, exactly. They think, hey, this company's got it together, even with all the climate stuff happening.
Okay, so it's not just how much exposure a company has, it's how they're handling it. They need to have a plan, And maybe those dividends are a good sign that they do. What about the different types of exposure we talked about before? Like, did investors react the same way to, opportunities as they did to those physical risks or regulatory risks?
That's a good question. It looks like they were really focused on opportunities and regulatory risks. Like, those two categories had the biggest negative impact on stock prices.
So investors are thinking about those things the most. They're worried about missing out on those green opportunities.
Yeah, it could be.
And the cost of all those new regulations.
Uh-huh. Makes sense, right?
Yeah, totally. So basically, even if a company is all about going green, investors might still be, nervous.
If they think the company's vulnerable, yeah.
Because of politics.
Yeah, all the political back and forth. And this is where the idea of climate change sentiment comes in.
Oh, yeah, sentiment. Remind me, what was that again?
It's basically how companies talk about climate change during those earnings calls. Like, are they positive? Are they talking about all these exciting new opportunities?
Like they're excited.
Yeah. Or are they, kind of doom and gloom, emphasizing all the risks and problems?
It's like how they're framing it.
Exactly. And you know what? Even companies that had a positive sentiment, they still took a hit after Trump won.
Really?
Yeah. Even if they were saying all the, right things, investors were still worried about all the roadblocks, all the political stuff.
It's like no matter what companies say, a big political event can just change everything.
Yeah, it can really shift the whole mood of the market.
It just shows how much all these things are connected.
It's a really complicated mix of factors, but this research helps us understand, how sensitive the market is to climate stuff.
To those risks and the opportunities too.
Yeah.
And that's important for everyone, right? Anyone who cares about, a more sustainable future. So where do we go from here? Like, what do we do with all this information? It's kind of crazy to think that just a few years ago, climate change was like this niche issue.
Yeah.
Something for, like environmental groups to worry about.
Right.
But now it's like a major economic thing.
Absolutely. I mean, this research shows that it's built into the market already. Whether people realize it or not, investors are looking at this stuff. They're figuring out the risks, the opportunities.
Right.
And making choices, based on that.
And it's not just about avoiding the bad stuff.
Right.
It's about finding the companies that are going to do well in a world that cares more about sustainability.
Exactly. That shift to, a low carbon economy is going to create a ton of value.
Right.
And investors are trying to figure out who's going to get a piece of that.
So it's really important to understand how companies are dealing with climate change.
Absolutely.
It's like we're at the beginning of this huge change.
Yeah.
And the companies that get it, they're going to have a big advantage.
Yeah.
But for the average person, it can be kind of overwhelming.
It can.
Like, where do you even start?
I think it starts with awareness.
Okay.
Like understanding those basic things we talked about today. Climate exposure, those regulations, what's happening in the green sector.
So like the more you know, the better.
Yeah. The better decisions you can make, whether you're, an investor or just someone who's trying to support businesses that, do things the right way.
Right.
It matters.
And it's not like you have to be some financial whiz.
No, not at all.
To make a difference.
Every dollar you spend, every investment, it's like a vote for the kind of future you want to see.
You're right. Like we all have power. We can influence the market, support companies that are, trying to do good things. Hold the other ones accountable.
And don't forget, talk about it.
Yeah.
With your friends, your family, tell them what you've learned.
Right.
Get them thinking about, what their choices mean.
It's like this ripple effect. Right?
Yeah, exactly.
Where more people start saying, hey, we got to do something about climate change.
Yeah.
And support the businesses that are part of the solution.
Exactly. The future, it's not set in stone. We create it together by what we do, by our choices. And when we get, this financial side of climate change, we can make better choices.
So it's not just about saving the planet, right?
Yeah.
It's about building a better future for everybody.
Exactly. A future that's good for everyone and good for the planet.
Well, I don't know about you, but I learned a lot today.
Me too. It's a really fascinating topic.
And I hope everyone listening, feels a little more informed.
Yeah.
And a little more, empowered.
That's the goal.
So remember, stay curious, keep asking questions, and use what you learn to make a difference. Thanks for joining us for this deep dive.